Welcome to the REI Freedom Podcast, where we unleash the power of real estate investing and empower you to create a life of freedom on your own terms. At REI Freedom, we provide high-level acquisition skills training and coaching to take your real estate game to the next level. Say goodbye to deal cancellations and hello to consistent success. Join us on the REI Freedom Podcast and unlock your potential and claim your freedom in real estate investing. On this week's episode of REI Freedom, Jeremy had the pleasure of sitting down with Jacob Clopton, a serial entrepreneur and the founder and president of Clopton Capital. Since 2010, Jacob's Chicago-based firm has facilitated billions in commercial real estate loans, giving him a wealth of experience in the industry. With a background as a trader in financial markets, he brings a unique analytical perspective to real estate financing that few can match. Jacob is also the author of the insightful book, Commercial Real Estate Investing: Understanding, Finding, and Funding Deals in Today's World, and is recognized as a thought leader in the field. In this episode, Jacob pulls back the curtain on mastering commercial real estate financing. He shares expert strategies for winning off-market deals and building passive wealth, emphasizing the importance of relationship building, speed, and creativity in financing. You'll learn how to establish trust with brokers to gain access to exclusive opportunities, his unique 48-hour due diligence method that enables quick and confident action, and the creative financing packages that make his offers stand out in competitive markets. So whether you're just starting out or looking to refine your approach, this is an episode you won't want to miss.
Hey, Freedom Fighters, welcome back to another weekly episode here at the REI Freedom Podcast. I'm so happy to have you guys listening in again. Our audience continues to grow, and I'm very, very grateful for that. We've got a great guest lined up this week, as always. A little different this week. I think it'll add some good variety to what we do. His name is Jacob Clopton, and he is a serial entrepreneur, economist, and founder and president of Clopton Capital. Since 2010, his Chicago-based firm has facilitated billions in commercial real estate loans. With a background in financial markets as a trader, Jacob brings an analytical edge to real estate financing that few can match. He's also the author of Commercial Real Estate Investing: Understanding, Finding, and Funding Deals in Today's World, and a recognized thought leader in the space. What we'll learn in this episode with Jacob today is he's going to pull back the curtain on how relationship building, speed, and creative financing can give him the edge in competitive markets. He's going to share his exact strategy here today with us to win off-market deals before they hit the public, starting with rock-solid relationships with brokers, which sounds amazing. Well, Jake, super happy to have you here on the show today. Thank you so much for being a guest.
Likewise. Appreciate me on.
So, obviously, I gave a little bit about your bio, but if you could please tell us a little bit about your story of how you got to where you are today, that'd be great.
Absolutely. It's kind of an interesting story. I actually don't have like a traditional banking background. I used to trade like interbank hedging product futures, 3-month LIBOR and Fed fund. Well, LIBOR doesn't exist anymore. The Fed funds, treasury, stuff like that. And I was doing that in 2008. So that was like the credit crisis, right? And at the time, right, I mean, it was a credit crisis, so you couldn't find money. And that was my idea, to start an intermediary to help people find capital. At the time, it wasn't just real estate deals. It was like all types of business. And, I think I remember even financing like a couple like semi-trucks and stuff like that. Oh. But it quickly kind of became just real estate finance. We've been doing that for almost 17 years. Something like that now. Our company's grown quite a bit. I think I mentioned this before. Like, I still do the financing side day to day, but we expanded what we do because it's all the same people that need the same different products. So we also do insurance, and we're a sales brokerage. And I mentioned we do solar, and we're 1031 QI. We do cost segregation through a partnership. So we got a lot going on. It's all services built around real estate deals, and we're trying to make it.
I love that. What made you write your book, Commercial Real Estate Investing: Understanding, Finding, and Funding Deals in Today's World?
I consistently run into like two different types of investors, right? One is a commercial real estate guy that's coming from a commercial real estate background, right? He's in acquisitions for a real estate company. They're more like middle market. Even like, some private investors have good commercial real estate background. It's a little bit larger deals. But I consistently run into another type of investor, which is somebody who's starting in like the single family home investment space or coming from residential and wants to move up to commercial. And I constantly get asked similar questions, more like exploratory and educational questions. And so I really kind of wrote that book as kind of a crash course into just bringing somebody up to speed with the general things around understanding commercial real estate, like the different capital sources, how we've been able to help people find deals in the past, stuff like that. Some of the language. I mean, the capital sources alone, there's like 10 different kinds and then hundreds of lenders inside of each kind, right? So, it's really just kind of a springboard to get people to get a better understanding of the commercial real estate side of deals.
I love that. And when you say commercial real estate, can you simplify exactly what you mean when you say commercial? Because I know that's relatively broad. Are you talking broad, or are you talking anything specifically niched in that commercial space?
No, I'm talking broad, but generally speaking, it's anything that is not a 1 to 4 unit residential home.
Okay.
Right. So not something that would qualify as somebody living in or qualify for like a residential mortgage or something like that. That's how I differentiate commercial real estate. So 5 units and up on the habitational side, and then any other piece of real estate that really just makes money. It encompasses hotels, industrial, all kinds of stuff. Right. Exactly.
Awesome. Now, are you an investor yourself?
I am. Yeah, absolutely. I mean, it's just kind of what I know. Once you're in real estate, I do have some stocks and stuff, but once you're in real estate, you kind of start looking at the stock market and you're like, So.
As we record this in May of 2025, the stock market hasn't been everybody's best friends as of late. So real estate continues to go up. The stock market's not so much. So
exactly
with that. Well,
right.
Well, I'm happy to have you on the show. What we pride ourselves on here is off-market acquisitions, right? It's really hard to find the great deals on the market, or basically when everybody else finds out about them. So tell us a little bit more about your strategy about how you go and find off-market deals.
It's a good question. And our business is built around basically the same, finding real estate owners, which I think is like basically the same way that people would find off-market deals. Let's differentiate like what's an off-market deal, right? Because a lot of times I see stuff that's on the market that's marketed as an off-market deal. And I'm like, what? What are you talking about?
This isn't.
You see that, right? You see stuff on LoopNet, and it's like, exclusive off-market deal. And I'm like, but it's
on LoopNet
right here. Yeah, interesting. I think to find off-market deals, it just takes work, right? I mean, it takes a grind for sure. And you really have to come up with a system to get through to those owners. And when you get to the commercial real estate side of things, everything kind of ends up turning into like corporate research, like getting through an LLC and stuff like that. We've used a lot of different ways to do that because of AI now, and there's a lot of data services. It's a lot easier to do this stuff than it used to be. When I first started, 15, 17 years ago, it was like, it was basically the same process if you were a debt collector, right? It was skip tracing people. It was like finding the title data, then finding the LLC, then researching the LLC, then finding the guy that was registered the LLC, then getting their phone number. I mean, it's like a
whole process. Yeah.
Oh, yeah. There's no silver bullet answer, right? So, there's a couple different ways that I see people do this stuff. Is one, just find, the LLC and whatever address the LLC is registered to, and you can kind of buy title data from a whole bunch of different sources and do mailers. I don't particularly think that works very well. I think you end up with a lot of registered agents.
Sure.
And, a lot of, yeah. And I mean, that's really low hanging fruit.
Yeah.
And people probably just ignore that stuff.
Yeah.
What I think actually works is, taking, and it depends on your scale, right? I mean, like, how big of an area you're, kind of looking at. To find off market, I would probably start with like a smaller area and really do the research, find the LLCs, find the guy, and then call them directly. You know what I mean? I don't think this type, and you can correct me if I'm wrong, I don't think this type of stuff would fall under like the Do Not Call Act or whatever. You're not really soliciting.
Right.
Somebody fact check me there, because
yeah,
I don't know.
You have to run it through the DNC, but if obviously you're not doing large volumes. I would assume when you start talking commercial, you're looking for somebody who owns that 20-unit building. You're hunting them down through the LLC and finally getting them. They're not somebody who's probably on the DNC because credit collectors are calling them every day of their lives. It's a different type of seller. So when you get this person on the phone, do you go through a script? Do you kind of just wing it? Do you know what to say? How do you approach that, Jake?
It depends on what your acquisition strategy is, right? I mean, if you're out here just looking for, to steal properties, it's probably going to be close to telemarketing.
Yeah.
You're going to have to touch, I don't even know how many properties to get somebody. Yeah, thousands, right? I mean, and doing the thing where like, hey, cash offer, blah, 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 you know, and everybody kind of knows what you're doing. If you're really looking for just like a good deal on an off-market property, you've really identified some like, hey, this would be great in my portfolio. I mean, I would approach them probably just less salesy and more just professionally and tell them like, hey, really this property, you want to make a deal that works for both sides. Probably not be super pushy. I don't know a lot of real estate people that like getting sales called, and because we get them constantly, right?
We do.
Yeah. I don't know. I mean, you're probably like me. As soon as I hear like a sales tone of voice, I'm like, I'm gone.
Yeah.
Like, you know what I mean? But yeah, I mean, that's how I would approach it. Less pushy, less salesy, more trying to make a deal work between you and them. But also, again, depends on how you're trying to acquire these properties. Because again, if you're doing the all cash offer thing and trying to steal deals, it's going to have to be a telemarketing process. You're going to have to touch thousands of properties.
Right. Yeah. And, when we're talking the larger space, it means specifically for you, I assume you're talking kind of like syndication type situations as well. I mean, you looking to acquire these as a general partner, then bring in some LPs to kind of help fund the deal, or are you basically just looking for those 6 to 12 to 20 unit buildings for yourself and then use your financing capabilities since you're in the game to just fund the whole endeavor for yourself?
Yeah, I mean, it depends on the deal. I'm kind of busy, right? I mean, I don't really manage properties day to day. We use third-party property management company. If I was managed, because I have all these other, verticals and companies going on in commercial real estate. If it was me managing them every day, which I assume is most of what the people who are listening to this to are doing, I would be a lot more comfortable taking on investors. I mean, I think if you're relying on a third-party management company, you're putting their fate in somebody else's hands, which, to me doesn't sit well. But so the stuff that I look for is really just for our own book. And I'm typically looking for like a long-term kind of tired owner that wants to retire, that is usually somebody that does their own maintenance.
Okay.
You know what I mean?
Yeah.
We all know the guy. Like he doesn't fix stuff. He just he fixes stuff, but he doesn't replace stuff
as needed.
Yeah, like the HVAC is at a constant state of disrepair, and he just kind of goes there and like, okay, well, I'll be back tomorrow to tighten this screw again, and it'll be fine. Yeah.
When I mentioned your bio, you talked a little bit about brokers, right? So you're saying that brokers give you easy or early access to deals that maybe other people don't know about. Can you tell us a little bit more about that process?
Hi guys, Shelly here. Before we continue with this week's episode, we'd like to take a moment to share an exciting opportunity. If you're eager to achieve financial freedom through real estate investing, check out our coaching programs at REI Freedom. We offer multiple coaching formats and price points, ensuring there's something that works for any investor's budget, needs, and schedule. Whether you're just starting out, looking to scale your deals, or aiming to enhance your team's skills, we have something for everyone. Just go to reifreedom.com/apply to book a discovery call to learn more. Now, let's get back to the show.
Yes. So even though they wouldn't advertise that they do this, but if you get a great relationship with a broker and you can show that you can close deals, you know what I mean? They'll consistently bring you the deals first, right? A lot of sellers, and this is a good point for when people that are looking for off-market deals, is really demonstrating that you can close. Because I have been in sales processes, and I'm sure almost everybody gets into it at one point, where you're either buying or selling a property and somebody doesn't perform for whatever reason, right? And if you're selling a property, the other side always comes with some reason why it's your fault, right? But I mean, if the broker knows you're a closer and that you have the ability to perform, they'll bring you the deals first. You may not offer the highest price, but as we all know, the highest price doesn't necessarily close all the time,
right?
And certainty of close is extremely important in this business because think about it from like a sales guy's perspective. You're going to lock up some property, and they're going to start spending money on attorneys and stuff right away.
Right.
And you may not even have hard money down yet. And that's important. Like if you don't close, you're going to cost this guy money. So that's why like having that relationship with brokers and kind of demonstrating to them that, hey, you bring me these properties, I will close them is really important. And they'll show you those deals first before anybody else.
Yeah, because I could assume not only for a broker losing out on that commission, but the reputation hit that he could take would be detrimental too, right? He can't bring more sellers to the table if he has a reputation of his buyers backing out of deals and not coming through. That'd be
Well, that's right. And you might lose that listing, right?
right.
Like, hey, you're bringing me people that can't even close. You're costing me money.
So if somebody was, somewhat novice in the space, they've been fixing and flipping houses, maybe even own a few handful of rentals, but they say, I want to get into the bigger properties. I want to start looking at the 6, the 12s, the 20s, the 30s and up. What would be some advice you'd give somebody looking to make that transition?
It depends on who it is, right? I mean, the number one thing that I always tell people when you're making a transition from, single family homes going into commercial real estate is one, I mean, the financing is totally different, right? I mean, if you're using residential mortgages to buy these like single family home investments, the financing and the capital sources are going to be totally different on the commercial side. The terms are different too, right?
Right.
So really, understand what the finance side is. And I'll tell you, that's one of the biggest tip-offs I usually get to if somebody hasn't done commercial yet is they'll ask me like, hey, I need a pre-approval. And I'm like, that doesn't exist, man.
Yeah,
like, okay, I get it. This is your first commercial deal, So, really understanding that side. And then the other thing I tell people constantly, which also applies to residential, but I think even more so on the commercial side, is these are operating businesses you're buying, not just an investment. Like,
Sure.
this isn't something you're going to sit back and like collect a check from. Like, these are operating businesses and treat your tenants like customers and not tenants. And then I think if you go into it with that mindset, you're probably going to do well in this space. But if you go into it like thinking like, I'm just an armchair thing and,
It's passive.
that's
It's
not going to work
passive.
that
I
way.
just collect rent checks every month and I don't have to do anything. Nothing
Every
at all.
time I see passive real estate investing, I'm like, oh boy, somebody's about to lose some money.
Yeah, exactly.
Yeah.
You also talk here about your 48-hour due diligence method that allows you to act fast. Can you tell us a little bit more about that?
I think as far as due diligence, locking up a property, right? Go into these things and make your offer based on diligence you've already done. So like the biggest problem I see, this happens constantly in deals, is people get into due diligence periods that are just too short, especially when they haven't kind of lined up financing. And so, I mean, there's no pre-approvals, right?
Right.
But I see a lot of people just lock up properties and, with like, let's say like a week-long due diligence period when like their deposit's going to go hard. And then it's a scramble every time. They call me up. Oh, I need a deal. I need insurance. I need this. I need that. And I'm like, dude, we haven't even started. And I mean, get it. Like these things take time, right? So before you're going to submit an offer, I would have done a fair amount of due diligence up front on this property and more about, maybe even less about just the property itself, but more around like the things you're going to need, right? Like you can't have a pre-approval, but at least have the lenders lined up, have insurance lined up, stuff like that. Have this stuff in place where you can go into here and like already have at least the outlets that are going to give it to you identified, as well as like property management and all this stuff. Because if you get into this and you're a week in and you don't have any of this stuff lined up, and your deposit ends up going hard, you very well may end up losing that deposit because something might not work out.
And it's going to be pretty significant when you're talking properties of this nature as well.
Yeah, 20, 30,000, but maybe more.
Yeah. Now, you also here, it says you talk about creative financing packages. You make your office stand out. Can you tell us a little bit more about like bridge loans and, favorable seller terms, things of that nature, things that you're using to get deals done?
Yeah. So there's 3 types of loans, right? There's perm loans, which are, your 5, 10-year fixed, 25, 30-year AMs. Bridge lending, which is really meant for more like transitional type stuff. And it's pretty much always from private lenders. And, it can go, this is for stuff that you're primarily going to use it. You're primarily going to use it to like fix up a property, right? And you're going to increase, NOI in some way, increase value. And it's going to take maybe, I don't even know, like a year, 12 months, 18 months, something like that. You're going to reposition it and then be able to, perm it out later on. And because of that, you can usually get like a higher loan to cost. So a lot of times, we're going into properties, with a loan to cost, somewhere around like 80, maybe 85% for bridge lending, right? And when I say loan to cost, I mean acquisition price plus whatever rehab dollars, stuff like that. So you're getting a lot more leverage that way, but you're able to do that because you're creating value, you're pushing rent, stuff like that in a short amount of time. That you're not going to do if you go to a traditional bank and just ask them for like a perm mortgage or something like that. So this is a way to get a little bit more creative. On seller financing, I see a lot of people try to do pretty creative seller financing and stuff. I think there's a right way to do it and almost like a wrong way to do seller financing. I think the right way to do it is to use it as a tool in a toolbox as part of your equity, and I usually tell people like, hey, if you're going to do seller financing, try to get the guy to stay just in the operating agreement in some way. right? Not as like a second lien or something like that. Because if he stays in there, then it's equity and sellers are not really going to have as big as a problem with it. If he goes on the mortgage as a second lien, it's just going to, or if he goes on the property title as a second lien, it's just going to be looked at additional leverage, right? And that's where, from a credit perspective, we start to get really skittish because, the number one thing you want to avoid is like super high leverage financing, or what I see constantly is people trying to get 100% financing. And I'm like, that's never going to happen.
I see it on Facebook. It happens all the time.
I'm sure it's happened. Yeah, I'm sure it's happened, but like realistically, that's not going to happen in the real world.
Of course. So in that scenario, let's say, the guy that you were talking about who has been working on his furnace for the last 10, 15 years and refuses to get a new one, but it's always, on the brink of collapse. And he says, I'm interested in selling my house, and you could come in with a commercial loan. You would get him to potentially sell a finance, maybe that 20 to 25% down payment, right? But you would have him as a minority equity owner of the property rather than putting him in the second position.
Yeah, I think like if I were to do it myself, right? The seller financing side, what I would probably do is try to keep him in a preferred equity position as much as possible, right? So pref equity is, let's say it's as close to debt as you can get, but still being equity, right? I mean, it doesn't have upside. So it has something like, structure like a 14% kind of current pay or pay for the guy, right? He gets a 14% return. Well, that's pref equity. That's not common equity. You keep them in the pref equity space as much as possible. I don't think, again, you're going to get away with keeping 100% of it and not putting any equity in yourself. But what I'd probably do is come in with 5, 10%, of the equity that's needed. And then, have them finance about 15%. So let's say I'm 5 to 10% of the purchase price. They're 15 to 20% of the purchase price, and then I'm financing 75% with a bank or bridge lender or something like that. That I think would be something that would be realistic to get done, and keeping them in that pref equity spot so that they're just getting a return and they're not getting equity upside for what's going on.
I see what you're saying. All right, that's right. That's very creative. Well, as we wrap up the show, I'd like to know where, I'm going to say listeners can get your book, but more or less, where can I get your book?
It's on Amazon. I think it's on the Amazon, there's got some all you can read type of deal thing. So it's up in there. And then I'm extremely easy to get a hold of. If you can't find me, I don't know. You can't use Google. So I'm all over LinkedIn, and our website's Clopton Capital, and I'm around anytime to chat.
Yeah, and we'll put all those things in the show notes as well. And I just want to say the book name again: Commercial Real Estate Investing, Understanding, Finding, and Funding Deals in Today's World. Awesome. Jake, really great podcast today. I really appreciate you being a guest on the show. Great stuff. And, obviously, if people are looking to get into the commercial space, they should be reaching out to you for all those financing options. So I hope they do that as well.
Appreciate it. Thanks, Jeremy. Likewise.
All right, guys, that's it for this week's episode. Man, Jake has definitely got a lot of expertise there, and it was great to hear some of his insights of how to find some of these off-market commercial deals and how to fund them. So if you guys want to get more details on that stuff, I highly recommend that you reach out to him. And again, all that information is here on the show notes. Until then, guys, we will see you next week. Enjoy the rest of your week and keep building that life of freedom through real estate investing.
Join us on our journey to achieve ultimate freedom through real estate investing. We understand that the road to success isn't easy, but together we can overcome any challenge. Please subscribe, rate, and review our podcast to help us grow and reach more aspiring individuals. Visit our website to access additional resources and join our email list. Follow us on social media at REI Freedom for more updates. If you're interested in our acquisition coaching programs, visit reifreedom.com for more information. Let's go.